Hi, welcome everybody. We're just gonna give a couple minutes for everyone to filter in, but welcome to the webinar. We're gonna get started in just a minute or two.
See who's joining here. I see Buffy from Monrovia. Welcome. Talk to you guys soon about the audit.
All right, we're
Man,
just
there's a
gonna
lot
give
of you.
another 30 seconds and we're gonna get started. We're just letting everyone filter in.
Mark San Marino, I see you in there. If I miss anybody, I apologize. It's a lot of names. Seeing every 10th name jump in.
All right, well, we're gonna go ahead and get started here today. Hello, everyone, and welcome to our next webinar in the Back to Basics series, Put the Pieces Together, a guide to bank reconciliations. We're so happy to have you with us today. Before I introduce our presenters, I just want to go over a few quick housekeeping items. This webinar is being recorded, so be on the lookout later today for an email containing a link to the recording as well as a copy of the slides. This webinar will run for 50 minutes with a 10-minute Q&A session immediately following. If you have any questions for our speakers, please put them in the Q&A box located in the Zoom toolbar. To find that, hover your mouse over the top or bottom of your screen and the toolbar will pop up. This webinar is eligible for 1 hour of CPE credit. We will launch 4 polls throughout the presentation. To receive credit, you must answer 3 of the 4 polling questions, and also complete the short evaluation you will receive afterwards. The evaluation email will be coming from Prolera. If you're having trouble seeing the polls, please try minimizing the Zoom screen, as sometimes the poll questions box pops up behind it. You may need to click around and drag the Zoom screen around a bit to see it. If you are using multiple screens, check each one because it may pop up on another screen. If that does not work, you might need to go in and disable your pop-ups. All right, now I'd like to introduce to you our presenters. Louis Li is a manager in LSL's consulting and advisory department. He thrives in the challenges of helping clients find solutions through new systems and procedures, and he helps to adapt the new financial systems. He began his career as an accountant and transitioned to consulting, specializing in working with government agencies. His experience in governmental accounting and budgeting includes managing the implementation of new financial software, reconciling multiple types of accounts, reviewing transactions and/or journal entries before posting to the general ledger, and various consulting and agreed upon procedures projects. Riley Greenlee is a manager in LSL's assurance and advisory department. He has extensive experience in all phases of local government audits, first-time act for implementations, and single audits. He is an active GFOA technical reviewer and holds an advanced single audit certificate from AICPA and has background in assisting governments for achieving the GFOA certificate of achievement for excellence in financial reporting for the first time and beyond. Riley's expertise includes planning the nature, timing, and extent of audit procedures in accordance with the government auditing standards and the provisions of the Single Audit Act under uniform guidance. He also assists clients with the preparation and review of GASB 68, 75, 87, and 96 journal entries, the ACFR, and the schedule of federal expenditures and awards. And behind the scenes is Ryan Darmino, partner in LSL's Assurance and Advisory. He will be behind the scenes answering your questions through the Q&A, so feel free to put your questions in the Q&A box throughout the presentation. Okay, Louis and Riley, time to take it away.
Thank you, Cami. So today, the objectives for today's webinar are going to be learning about the challenges faced by government agencies while reconciling bank statements and recording and/or reporting cash. Also learning a step-by-step approach, preparing a bank reconciliation, discussing year-end closing entries such as GASB 31 and interest allocation, discussing best practices for documentation and preparation for an audit, learning about common mistakes and questions we come across. So in preparation for this webinar, we would like to see where everyone's at with their reconciliations by launching our first polling question. Are your organization's reconciliations really reconciled? A, absolutely yes. B, we have small variances every month. C, no one will ever know. And D, I don't touch any reconciliations. So while everyone gets that done, we'll go to the next slide and then we'll reveal the results right after. So why are bank reconciliations important? Usually it's after all transactions have been recorded during the month anyway. You think no one looks at the cash account or other accounts after the fact. You might be right that no one appreciates it, but it gives more information than just making the bank match to the general ledger cash account. Bank reconciliations are a fundamental accounting process that involves comparing an organization's bank statement to its cash account in the general ledger. By identifying and reconciling any differences, we can ensure the accuracy of the financial records and prevent errors that could lead to financial losses. Accurate financial reporting and reconciled bank accounts help to maintain the integrity of financial information that will be used by others, including different departments in the organization and the public. It also helps detect fraud or other errors by identifying unauthorized transactions unauthorized transactions and incorrect entries early when the bank reconciliations are done timely. If we can show the results of the poll. So it looks like, okay, I prefer everyone to get A or B. So let's see, 51%, more than half absolutely yes. 34%, we have small variances every month. Kind of happy that 0, no one will know. And then 15%, no, oh wait. Oh, interesting. I'm hoping.
Sorry about that, Louis. We had a double answer on that last one.
No worries. But luckily A and B would be the majority, so I'm happy about that. And then let's go on to the next slide. So to get started, these are the most common types of reports you will need to use for reconciling your bank statement to the general ledger cash account. I have seen clients require additional information than stated in the slide. I'm presenting the minimum amount of reports needed to get started. So this includes bank statements, credit card statements. This one is mostly for reference, but it will come in handy later on. Check listings issued during the month, previous month's outstanding checks listing, cash receipt listing or deposits recorded during the month, previous month's deposit in transit listing, and the GL cash balance at the end of the month. Once you have all these items, then we can probably get started on the bank reconciliation, which leads us to this next slide. In this example, we have two types of accounts that this client has. One is a checking account and one is a savings account. The checking account, as you can see, looks like it's the one bank account where all the checks are being issued to be paid out of. And the savings account is where all the deposits are recorded and posted. It makes sense for some agencies to do it this way since it separates the two types of variables like outstanding checks and deposit in transit. So essentially, what we're trying to do here is comparing between both the adjusted bank balance versus the adjusted general ledger cash balance. To calculate adjusted bank balance, you'll take the ending bank balance from the bank statements minus outstanding checks plus any deposit in transit at the end of the month. In this example on your screen, we'll work on it separately. For the checking account, you can see the ending bank balance is the 204,000. And after clearing off any outstanding checks, we have a listing at the end of the month for 157,000. You'll minus that for the outstanding checks since those are checks that are expected to post to the bank, which will decrease your bank account balance. And your adjusted bank balance would be the 46,000 and some change. Now for the savings account, the ending cash bank balance would be the 422,000. And since all the deposits are recorded in the savings account, we cleared off all the deposits that cleared through the bank. And so far the deposits in transit for deposits that haven't cleared either due to timing or it's still on its way to the bank, would be 90,000. And since we're expecting to receive this in the bank, so it's going to be adding to your cash balance, which makes the savings account adjusted bank balance to be 512,000. After that, you will take the general ledger cash balance, either depending on if you have to add up all your funds cash accounts together that go into either the checking or savings, or if you have a pooled cash account that equals to all of them together combined, and you're comparing it to the bank balance. For the checking account, the general ledger balance should be 156. That's been recorded in the general ledger. And since you can add or subtract pending prior months JEs, which essentially are prior months reconciling items that either are timing differences that are expecting to clear in the general ledger during the next month, so it's carried over. And your adjusted GL balance for the checking account would be 156,000 and some change. And then same thing for the savings account. If there are any prior period months JEs, then it would affect your adjusted GL balance, but there are none. So for the savings account, there's a GL balance of 503,000. And as you can see for the checking account, there is a GL variance with 109,000, which means that the GL is showing a greater amount versus the bank balance. And then for the savings account, you can see there's a negative 9,000, which means that the GL is less than the bank balance. Now, essentially what we're trying to do is see if there is a variance. The variance tells you is there are probably items in the bank that may have not been recorded, so unposted transactions, or the GL may have transactions that either are recorded in the GL cash balance in error, or it hasn't been cleared yet. So in the next slide, when we go, so you will still see the checking account and the savings account. We see the GL variance with the 109 and the 9,000 variance from the previous slide. So now you will start to find items in the bank statements that haven't been recorded in the general ledger, or you would review the general ledger that probably was not recorded correctly. In this example, we noticed that there is an interest income that hasn't been recorded in both bank accounts. And so we put that as a reconciling item. Since it's going to increase your GL, it should be entered as a positive number. And there are other items on the bank statement that's unrecorded in the GL, like wire transfer fees. There are some automated payments that go through the bank that usually you won't see until the end of the month. It looks like there's some global payments or other insurance payments and a transfer out that probably was missed, which is totally fine. That's why we do these bank recs, so we can catch these types in a timely manner. Also, it looks like there were some checks that may have been recorded into the savings account. Because we know for a fact that the savings account should be only deposits, what we do, that means the GL has, in error, recorded some checks. So what we would do would be increasing the GL in the savings account and then moving it over to the checking account where the checks should have been recorded on the GL. Let me see. So most common reconciling items would be bank fees, interest income, or other fees that may not see unless you look at the bank statement. Other than that, you usually should record everything that you know will hit the bank. All deposits should be recorded before sending off to the bank. All checks, payroll, and ACHs should be recorded before sending information to the bank. Also, if you keep up with your bank reconciliations on a monthly basis, This would also help your year-end process, as these items are fresh in your mind and reduce your workload at the end of the year. Everyone knows at the end of the year, getting ready for audit, which we'll hear about with Riley, it becomes a very stressful time and everyone's on edge. So this would definitely help with the workload and the stress factor at the end of the year. Which leads us to the next polling question. After seeing all the items that hit the bank rec that hasn't been recorded into the GL, which of these items, which of these items causes the most differences in your organization? A, deposit in transit. B, bank errors. C, outstanding checks. Or D, interest earned and service charges. I'll give it a minute while you guys work on that. And then we'll go on to the next slide. Now, this leads into the common challenges that I see a lot of agencies face, and I came from another agency as well, so I've seen these as my common challenges as well. Majority of the time, return checks or voided checks. I usually recommend having the AP person provide anytime a check is voided, so you will have the record of it in preparation for the bank rec. Just so you can know that it's coming, and also vice versa, if the AP person will not be able to see if a check was returned, it'll also be helpful if the person that's doing the bank rec can give the backup to the AP person for any return check so they can reissue on their side. It helps keep the GL clean because it's expected without having any reconciling items. Also, different amounts posting into the financial system compared to what cleared through the bank. This one's a little harder, as most banks use scanning machines to post into your bank account. They do not have an individual inputting information onto the computer for your account. Most of the time, banks are really good at verifying amounts, but just in case, verify that the amount is posted correctly and or rectified before the end of the month, so you can have limited reconciling items. Other things including timing issues from credit card payments. Credit card companies are worse than banks in terms of amounts being posted into your account, deposits or returns. Credit card companies usually have the list of individuals that the amount consists of, which you can verify with your receipt listings from your own financial system. Most of the time, it will be one or two individuals that make up the amount for timing differences. And in the next slide, I will recommend on the credit card machines on this part to limit as much timing issues as possible. Other common challenges include unrecorded transactions. Ideally, something not posted into ideally, something should have been posted into your bank, shouldn't be a surprise, but these items could be monthly charges like bank charges, as I spoke about in the last example, or deposits from the county like property tax, or the state for sales tax, which cash receipt processors will most likely not ever see. But I do have a solution for you in the next slide. Also, the other thing that challenges for the person doing the bank rec would be departments posting cash receipts not in a timely manner. Sometimes finance isn't the last stop when, depending on the agency and how they record deposits and send it to finance. Sometimes finance never sees it, so they are not able to review it. So there's a lack of communication on that side. And for the polling question number 2, it looks like majority of the outstanding checks. Deposit in transit would be next with 34%, bank errors 15%, and interest earned and service charges. I'm kind of interested about the outstanding checks. Are Are they because they don't match to the amount, or you just have issues with people cashing in their checks? That could be something that we can look into for you as well if you have more trouble with that. So we can move on to the next slide. So one huge solution that we offer in the consulting side would be a daily cash process. I won't have any examples on this since it depends on individual clients and how they essentially do their bank recs. Essentially, these are kind of mini bank reconciliations that are done daily. It helps with identifying errors earlier. You'll be able to catch missing transactions in the bank that should be recorded into the GL, and makes researching reconciling items in the end of the month shorter. Like in the last slide, if you receive a property tax or sales tax electronically through the bank, you can download your backup and submit it to the cash receipt processors. So at least it will be recorded into the GL since you verify it's been posted in the bank. Same as a monthly reconciliation, you take the bank activities during the prior day and clear off items on your outstanding check log and your cash deposit logs. Whatever has been cleared or recorded into the GL from the bank, you'll be able to identify and find the appropriate department or division for the questioning. It would be fresher on everyone's minds if it was kind of done daily. It gives everyone about 2 to 3 days, and most of the time they don't forget what they did in those days, but I could be wrong. It will take some time in the beginning, but once you get into a cadence, it should take about 30 days in the morning. First thing in the morning, I used to do these daily cash processes for the director and the manager. Also for the credit cards, from the last slide, I mentioned some terminal companies lets you choose a cutoff time for your processing. My recommendation is to always have the cutoff time to be midnight or as close to it as possible. Another recommendation is to try to get your online credit cards, if you can, to be on a different credit card terminal versus credit card payments being paid at the counter. And if you have multiple departments with credit card terminals, it may be a good idea to have a policy set in place that what they submit to finance matches the credit card payments being processed. It could also help alleviate timing differences and research. It might have an extra cost to getting another terminal, but if your agency is large enough, it could help in the long run. Other items for the credit card activities, sometimes most credit card companies usually has a log of all the individuals, like I mentioned before. It might be a good idea to download each day as well, just so you can have a backup in case the daily miniature bank reconciliation for the daily cash process. The daily cash process not only is a daily bank reconciliation, but it also lets the director and the manager know how much cash you have available after a day or two, instead of waiting till the end of the month to know how much cash is available. This would also teach or help make sure that there's enough money to pay AP and other payroll items. And that's it from my side. Now I'll pass it on to Riley to discuss how auditors look at cash.
All right, thank you, Louis. Looking at the chat here, I see quite a few of you when Louis asked this question about the issue with outstanding checks. Sounds like people cashing their checks was kind of the issue, Louis. It's actually a common issue that we come across. It'll be one of my common issues at the end. I know going through that process can be fun, dealing with like the state and the policies around, uncashed checks is fun. Louis, I don't know if you had any other perspective to add there.
For the hard part of cash, having people cash in their checks, definitely the AP person might want to follow up with the vendor. Maybe information has changed, like W-9s, the address is incorrect. There's always a reason why people don't want their money. Usually there is no reason why people don't want their money. But definitely, I think later on, Riley, you have a solution for some of it. So I'll let you, yeah.
Yeah, we'll talk about some steps you can take. Yeah, Lewis is right. It's usually not somebody doesn't want their money. I think most often it's trying to find that person, or they don't even realize that that money is out there for them. But we'll get there. We'll swing around at the end. So thank you again, Lewis. Thanks for taking us through all those procedures. So I think now we can kind of switch gears, for a bit here. We'll talk about the auditor side again. Reminder to everybody, I'm Riley Greenlee. I've been a manager with LSL auditing, government agencies now for 8 years. Do a lot of cities, counties, and special districts. A lot of looking at cash procedures, investment procedures, all that fun stuff to talk about today. So we're going to focus on some of the things that the auditors actually look at when they're auditing your cash. Some of the things I think you could do to prepare ahead of time. Lewis mentioned kind of at the beginning of this presentation that it can be super stressful to be prepared for the auditors. You're trying to get everything together. Well, hopefully my big goal here is to alleviate some of that stress. There really aren't a lot of new items that you'll need to prepare for your auditors. A lot of these are really just great best practices that you can implement on your side. If you don't already have them there already, and just realizing, hey, maybe these are things I just put together and send to the auditor. Auditor might be calling it something totally different. So let's jump to the next slide, Lewis, and we're going to kick things off by launching our third polling question. I think it's a great place, like Lewis said too, kind of starts us off getting gauge on where everyone stands. We hear struggles more and more on like understaffing or deprioritization of bank recs, loss of knowledge from people retiring, new people kind of taking on, roles with reconciling your bank accounts because of this. So how on top of your bank reconciliations is your organization? Are you reconciling every month within 30 days? Gold star if you are. Are you reconciled usually within that 60 to 90? Are you on top of it, but it's about 90 plus days? Or heck, we're not worried about that. We got other problems and we're just trying to make sure everything's reconciled and ready for the auditors when they show up. So we'll give that a minute to close here. I would hope that most people are between that A and B range. If you're in the C and D, that's totally okay. Want honesty out of this poll because it helps take the steps moving forward. I would say probably a risk if you're in that C to D range. Conversation with your auditors could lead, if it's an ongoing problem, maybe to a finding in the future if you haven't already been there. But there's a lot of steps you can take, kind of get your organization back on track, hopefully back at least into that B range. And honestly, just being here today, going through this back to basics series is like a great first step, going through that. Are we able to close? Oh, look at that. Perfect time. Awesome. So most of you, we got 87% of you sitting in that A and B area. So I'm really, really happy to hear that. For the 13% of you above, hopefully we can talk about some good steps you can take to be prepared and maybe reconcile a little earlier. Lewis has taken you through some steps that you needed to hear to kind of get you back on track. So why don't we jump to the next slide and we'll get started here, Lewis. Thank you. All right, so let's discuss at a high level, some of the steps that your auditors will take kind of when they're reviewing cash and like testing your bank reconciliations. The first thing any auditor is going to ask for, it's going to be a list of like all your organization's bank accounts. This includes like that last bank statement for the fiscal year being audited. So for most of you, if your city's here in California, this is going to be that June 30th date. The main reason that we ask for these items is to ensure that we're not missing anything. Second to that, we want to make sure that whatever statements we've gotten, or we'll talk about confirmations and such in a minute here, that all that agrees back to like your records, and that what we're auditing in your GL is the same as what the records are that we're receiving. This also helps us put together that list. I just mentioned confirmations. A lot of this work we can do without your input. We'll prepare letters and send those directly to the bank and kind of confirm balances from there. As part of step 1, your auditor is also going to need to review that GASB 31 fair value adjustment. You post that at your year end, and when we're trying to tie out statements and balances to your GL, obviously we need that portion as well so that we can agree with you at the end. So think your investment accounts. I think most organizations here are probably in at least LAIF. Those are going to be the common ones where we'll need to see your entry and allocations, interest allocations, all that good stuff. In addition, we want to make sure we're going all the way through it. So we're going to agree to like any footnotes for your financial statements that you've prepared. We have to make sure those are accurate as well. All that based on knowledge is good, ready to go so that we can start, the deeper dive into the audit. So think we have your GL at the top, folding into your financial statements into those footnotes that accompany the statements. So next, I mentioned this before. An auditor is going to make a selection, or in some cases, they might pick all of your bank accounts depending on how many you have or how large they are. And we're going to try to confirm that directly with the banks. These usually don't require a ton of work on your part or your teams. Auditors will normally prepare the letters for you. They'll send them over. Representative from your organization will sign them. And the auditors are going to directly mail them or email them to the bank. And oftentimes the bank will respond directly to us. Even now, a lot of banks are on confirmation.com. These steps can be done electronically through that website. Severely cuts down on the turnaround time, both in the signatures from you and organization, and also the bank just sending them back. I've even seen cases where we've tried to confirm that morning, and we already have return letters from the bank like by that afternoon. Honestly, the biggest pro tip I could give you here is, cutting down on the time with your staff is providing all the information and having that ready for us ahead of time, including like email addresses to your contacts, especially if you already know they're not available on confirmation.com, or contact with them is historically difficult. So kind of wrapping this up, once the auditor has completed your steps 1 through 3, we're super confident all the balances agree to your records. What we're looking at is reliable. Then we start diving into reviewing, testing your bank reconciliations and looking into some of those specific items. So if we jump to the next slide, I have a little behind the scenes, sneak peek for everyone here. So this is kind of an example of what a typical auditor's work paper might look like when we're trying to reconcile out your cash to GL and set up for what we ultimately want to test. So you can see we break everything out. Here we have 3 different types. We've broken it into cash investments and restricted investments. I think specific to this organization, we didn't have any restricted cash. So your organization might have a 4th category or a 5th, just depending on the situation. But the main goal here is so that we can kind of segregate things, understand how these are flowing through to the lines on your financial statement, and start building that structure for us to audit. So the main piece, really to call is taking all of your accounts. We're going to adjust these as necessary from column to column, accounting for fair value. If there's reconciling items, we have a specific column here for outstanding checks and deposits in transit. We're going to try to tie that to the GL in total. And mainly the population of this is coming from those bank statements and confirmations that we're receiving as part of our initial audit requests. Any variances that we have, for the most part, are going to be followed up on. We really, as your auditor, want to guarantee we're not missing anything. In this specific case, I think you can see at the bottom, I've circled it. We ended up with like a $360 variance. I think it was something to do with a rounding difference for our fair value adjustment. We recalculated it and rounded 1 decimal, I think, different, which resulted in like a $300 difference. So no big deal if we're talking small amounts there. Clearly, after working with the client, there was nothing that we were missing on our part, so we could move forward. So I wanted to include this. I'm a big visual learner. I think a lot of people I hear are visual learners as well. So I want to show you can see, this is an auditor, you're getting inside their head, how they're going to look at your cash, help you kind of build a mindset, for yourself on what you can prepare and some of the questions they're going to ask and like the perspective that they're coming from. Oftentimes, I'd say the biggest difficulty we encounter here is like when an organization has a lot of pooled cash with a large number of funds. So, winner for you who have a big organization with a ton of different funds. It can be a challenge for your auditor sometime, tracking all the different GL accounts between those funds, agreeing those to the specific statements that they're accounted for. So, if you see this for your organization, probably one thing I would suggest to prepare ahead of time is some kind of help reconciling those numbers out. It could be a list of GL accounts that associate to a bank statement, or some work paper that your staff uses to make sure you agree to your GL. Ultimately, something that's going to help your auditors. It's going to save time on our side, and more importantly, it's going to save time on your side. You don't need team members focusing on trying to help us agree something that might be considered simple on your side when they could be working on, say, other audit items, other closing procedures, or just general work in general, because your job doesn't stop just because the auditors are there trying to get information. So we want to take away from that as little as possible. So moving on to our next slide, I wanted to show everyone just a quick example of a confirmation here as well, and how we kind of recalculate that fair value that we were talking about on that last slide. So I chose LAIF in this contest because I think it's the easiest one, and most in organizations here, I would bet, have LAIF. We pulled this confirmation. I've got the screenshot at the top here. That's directly from the LAIF website. And our bottom screenshot is straight from that auditor work paper that we just discussed. So Louis, if you go back up one slide, it's coming straight from that investments item that's in the middle of the screen. All I did was take a snip from there. So let's go back to the confirmation. So you'll notice that we have a confirmation balance. It's June 30th, 2023. It's about $24.9 million. That's the number we're pulling straight into our work paper. So I highlighted it there as well, the 24.9 million. I put this in our second to last column because we are still missing a piece. LAIF has a manual fair value factor that we do have to recalculate for you. So we'll take a look at that as well on the next slide. So arrows going everywhere. Don't let that distract you. On the left, we have our fair value adjustment. This is the factor, gets posted right on the LAIF website. Auditors can pull this without you. You probably already pull it, or this gets sent to you in your organization for when you're booking your entries at the end of the year. And on the right, same screenshot we were just talking about from that auditor work paper. So you'll see we're going to recalculate it. We take that highlighted fair value factor, and we multiply that in that top right corner by what we have for the LAIF balance straight from the confirmation. And it gives us the fair value that we should be reporting. And that's the fair value that we hope when we go back to your GL and your accounting records that agrees. If it doesn't, like in our example case, they had a small rounding difference. That's fine. Easy conversation to have with the auditor. Other common reasons I've seen things like this differ is if you use some sort of service organization. I think Chandler is an example I see pop up here and there. They use some of their own calculations that do disagree. That's a conversation to have with your auditor. Ultimately, decision to be made at that time, what the correct number is. I would say my advice is oftentimes, especially if you're looking at something like LAIF, rely on what LAIF publishes more than you would rely on like what Chandler has for you. It's great for other investments, camp and all that kind of things, but if it's posted directly from the pool, probably better off to rely on those numbers. All right, so let's move to the next slide here. And let's, talk about what auditors are actually looking at, if they're going to test bank reconciliations. Up to this point, we've talked about laying all the groundwork, making sure things agree. We've built this base. So what are your auditors going to ask for? What are they going to test? So the key points I have laid out for you. The first thing that we're going to look at is timeliness. We always recommend bank reconciliations are prepared within 30 to 60 days from the end of the month. Anything over that, unfortunately, could be a potential issue for your auditors. It all depends on your situation, though. This also goes, I'll mention, for your entire fiscal year. An auditor might assess like a significant risk or worst case, even a deficiency in your controls if your organization is behind all year on bank recs and just decides, hey, we're going to catch up for that audit at the end of the year, feel good about that. From an auditor perspective, we have to consider that risk. Your year was spent with cash unreconciled for however long that was. There are always exceptions to this. Somebody retires or leaves, leading a void or a gap. You got to get back on track. So I can't tell you for sure what that conversation will be, but if it becomes like an ongoing issue, it could lead to trouble in the future. We'll also look at, the support and signatures for your bank recs. So do you have signatures? Do you have something that clearly denotes who prepared your bank rec when? And then on the flip side, who actually approved it and when they approved it? It's one of those tedious things. Even workflow in ERP systems can make that a little more tedious. Honestly, auditors always look for this, and it's a really good piece to have. It protects, it protects your staff, it protects the whole organization to just have clearly denoted who's doing what in what order and when. The next one, little obvious, but you'd be surprised. Does your bank rec foot? Mathematically, is it correct? You'd be surprised how often we'll find like hidden rows or equations didn't get updated from the prior year, or just sometimes simple as, hey, somebody took a calculator and just added or subtracted incorrectly when they were reconciling the bank statement. I'd say especially this becomes more of an issue if you're reconciling outside your ERP system. The old saying goes, to err is human. A little extra review here helps mitigate that error. Kind of that final check that we're going to do is in the end, does the bank reconciliation tie to the GL in your ERP system? You can do this too, should be part of your checklist before you hand anything over. Make sure that all those entries have actually been recorded. Really, from the auditor's perspective, there shouldn't be any reason your GL should differ from what the reconciled amount is on the bank reconciliation. Honestly, by definition, if it doesn't agree, your cash isn't reconciled, which if the auditors find that, could be a discussion for something like a finding or an issue going forward. So finally, after we've agreed everything, we've checked all these processes now, probably this is the time when we're going to start testing, and what you all probably think in your heads of like that substantive portion of auditor testing cash and bank reconciliations. So we're going to start by looking at subsequent bank statements. We're going to start looking to see all your outstanding checks that have cleared. Those have been properly captured in your reconciliation. Deposits in transit, those cleared the bank. The biggest area we've also looked into and asked questions is like any of those other reconciling items. If when we review your bank reconciliation, we expect probably little to no other or like miscellaneous plug type items. Any of those do pop up, we will definitely need like an explanation or at least a rundown of why they're there and why they're not reflected already. I'd say probably the biggest issue I get and questions I get related to this is old items, plugs essentially that carry from year to year. As much as Maybe nobody will admit it, but it does happen that, hey, we don't know what this is. It's been here for 10 years and since so-and-so retired. That always that's going to draw attention from the auditors. You're better off just asking the question, get the help you need, maybe kind of dig into it and, figure that out. Maybe I should call out too here. When I say other, I did specifically call out outstanding checks, deposits in transit. If you've got like credit cards or like wires or EFTs, things like that, that's not what I'm talking about. Those we're going to test as part of outstanding checks, deposits in transit. We understand that's part of the regular process. It's going to be more those rare entries that pop up or those old items that carry over. All right, and let's move to the next slide, Louis. Thank you, sir. All right, so based on what we discussed and what your auditors are testing, let's talk about what you can prepare in advance. Honestly, this is what's going to save you the most time, right? So first things first, got to put together that list. Got to have the list of all your bank accounts with balances and how they reconcile the GL, especially if that's going to be helpful for your auditors. Let's talk about this is a great check for you. You want to make sure you're not missing anything. You want to make sure you get ahead of any potential issues that your auditor might come across. We joke in the audit industry about auditor luck. If there's something wrong, if there's something weird, even if it's a random selection, auditors always find the way to pick that item, right? So take that extra time, check to make sure you've got it. Sorry for those of you who have a lot of funds and pooled cash, that little extra work, but trust me, always worth it in the end. I would consider adding contact information. We talked about that before with confirmations. Get ahead of that, have email addresses for those that aren't on confirmation.com or hard to reach. Reach out to them even. It's okay for you to be part of that process. They do have to send confirmations directly to us. It can't come through you as the client, but you can totally be part of the, CC'd on the email, get a copy for yourselves, put it as part of your closing checklist procedures. It helps you see exactly what we're seeing and we're all on the same page, which makes everything go faster and smoother. Next, you're going to prepare and provide like all your bank statements for the year-end close month and the month subsequent to that. So for example, a lot of you are California cities that are in here. They're my clients. June 30 is the year end. So let's say it's June 30th, 2024. You're going to gather and provide all those June 2024 bank statements, but then you're also going to provide all the July 2024 bank statements. Remember, this goes back to the last slide, and we talked about how auditors will test your reconciliations. We want to see that all those subsequent statements, like outstanding checks are coming back, deposits in transit are clearing, credit cards outstanding, that's all clearing, as well as like miscellaneous items. If you say it's supposed to clear and we determine what it is, we're going to want to look at that as well. So then pro tip here I have for you guys are noted, great time to go through these statements again, double check for like alterations, double check for old items. This is your chance. Get ahead of your auditors, like I said, because that could be the difference of you correcting it and saying, yeah, our controls work versus your auditor coming to you and saying, hey, no, this is not good. We need to talk about a finding. Nobody wants to have that conversation. You'll provide your year-end month close bank reconciliation, obviously. So in our example, June 2024. This should be for all accounts in the organization, even if it's minimal activity, just gather them all together. You're going to have them anyways as part of your closing procedure, send those over. I won't dive too much into it again. Just make sure all the key points we mentioned on bank reconciliations are double checked. We talked about all those on the last slide. Everybody should have a PDF of these slides that's been sent out by our wonderful marketing team. Make sure you have explanations and you're ready to go for any questions your auditors have, or get ahead of them and send them with the reconciliations. I've had clients send me a Word doc that says, hey, we know you're going to ask about this. This is why it's weird. Reach out to me if you have further questions. Sometimes we don't. Yeah, just reiteration here, noting that these can be invaluable for you guys. And like I said before, you want to avoid a potential finding. If your team is catching it, from our auditor perspective, a lot of times we're going to look at it and say, great, we're glad your controls are functioning, your checks are working. I'd rather wait a couple extra days to get something that's correct than have to have a tough conversation with somebody. So with that, we will launch our fourth and final poll question. So let's gauge everybody here. We've gone through, Louis has taken us through how to reconcile, your bank accounts. He's taken you through some common areas there. I've taken you through like what your auditors need and why, some of the things we look at. So are you more confident, that you're ready and be prepared for your auditors this year? Absolutely. Feel the same, or no, I'm still confused. I really hope it'll make me feel better. Most people are at least a B. But if you're a C and you're still confused, I totally understand. Please put something in the Q&A. You can find that Q&A right next to the chat icon at the bottom or top of your screen, depending on how you're set up. Or just reach out to LSL or your auditor at a later date. Hopefully they can answer those questions for you. Okay, so while that's open, Louis, we'll just jump in and start common mistakes and questions. So we're almost there. Thank you everybody for your attention. I'm glad you're sticking with us. We're going to wrap up here and talk about these. So the first one hits back to something Louis kind of mentioned for us before. It's really like miscommunication. Miscommunication can create a lot of issues with bank reconciliation, such as missed transactions, amounts don't agree, items outstanding with different departments, especially if you're decentralized. I won't wade into it too much more because he kind of did cover, following up on those items and including them in your reconciliations, or maybe reaching out to those different division managers to make sure you're on top of it and they know you need to close. But I did want to call attention to it because it can become a common finding that we write. The second one, and probably the biggest issue we see when we come to audit an organization, is the timing of your reconciliation. A lot of them right now, like I said, short-staffed. We're suffering lack of historical knowledge due to retirements. It can be really difficult to start an audit if cash is not reconciled and ready. It's probably one of the more common findings that I've written of lately. We at the end of the day, we recommend that all your accounts are reconciled within that 60 days from the end of the month. Anything over that can be a finding, and then once again includes your entire year. We ultimately consider if you're not reconciled throughout the year, there's a higher risk that you rushed your statements at the end, or if there's other specific reason maybe that caused that. It just creates issues going forward. So as close as you can be to that 60 days, the better. Once again, one-off reasons, totally okay. Communicate that with your auditor. I'm talking about ongoing problems where you're consistently behind, month to month, year to year. One of the things I do like to mention when I talk about this with a lot of my clients is sometimes there's a time to realize and not be ashamed to ask for help where you need it. Most firms today, including LSL, I know Louis and his team work on this all the time. They're helping organizations prepare bank reconciliations. They're helping them prepare financial statements, month-end close. One of the common services we're seeing now is just like help for general audit preparation. If you're struggling with those areas, sometimes it's worth at least taking a minute, shop around, see what there is. You might even find after fees and salary benefits and all that to hire somebody, it might even be cheaper just to get that help to close things out. The last mistake I'll mention is kind of around that interest allocation when you're booking your GASB 34 entry. So fund going back to those who have a lot of different funds and they're allocating and pooling cash. We'll see issues that kind of originate with like GASB 34 tracking funds or funds that don't have cash, like your ERP system wants to allocate cash to them, or they want to allocate interest revenue to them. Another common one I've seen is like negative cash. Something just to take a double check on. Definitely one that we encounter quite often when those things are used. For common questions, I do have two. First one's an easy one. I get the question all the time. Do I need to book my fair market value or my fair value? Sorry, going back past fair value entry every single year. Answer from GAAP is yes, you should. Reality, I guess, is maybe, an auditor is going to make you record an entry and we're going to have a conversation with you, especially if it's material on our side. But if it's immaterial and it's small, like say you only have LAIF, maybe you can get away with it. Unfortunately, I doubt any auditor is going to give you their materiality calculation. It kind of goes against, we're going to give you all the answers to a test we're going to give you. So there are ways you can look it up online and calculate your own materiality if you want to go that route. If you're really, bent on not recording that entry, or make sure that it's very small, trivial amount, and you can argue with your auditors that it shouldn't be in there. I'll give the answer I give all my clients. At the end of the day, if you're questioning it, questioning the size, you're better off just recording the entry. You'll save more time just doing it that way anyways. The second question I want to talk about, this one I get a little bit more. Probably this is, I'd say, the number one most common one is items not clearing, which circles back to our poll we talked about with Louis. So like say your check has not cleared in 3 months or more or year. This is okay. Like we understand that this does happen. Some people, sometimes maybe they don't want their money. Maybe we don't believe that, or maybe we can't find them. For sure on the side, if you're trying to collect money, if you guys haven't deposited checks or your deposits in transit are getting super outstanding, you definitely want to reach out and figure that out. I mean, that's revenue for your organization. You don't want to leave that open. But for uncash check side of things, the issue becomes a whole other bag of fun. I'd probably give a shout out to one of our consulting partners right now, Kelly Telford. She gave an excellent talk on this at CSMFO this year, going through like when to write off outstanding checks, working with people on their policies and procedures for like that unclaimed property process with the state of California. And she's directly worked with some organizations to make sure that what you're doing is in accordance, and you can honestly set up a whole system and it takes care of it for you for the most part. So any of you who still have questions or that is a prevalent problem, I would encourage you to reach out to her or attend, next time that she's speaking about that. And honestly, with that, absolutely, yes, I'm very happy with those poll results. Most of you saying absolutely, or at least I feel the same. So we can open up for questions with everybody. I do appreciate everybody's time and attention. I'll mention again, there's Q&A at the bottom or top of your screen. It's right next to the chat icon. And while everybody's kind of putting questions in there, Louis, if you go to the next slide real quick, I'm just going to do a quick shout out. We have 2 more great LSL employees, James Butera and Noah Daniels. They're going to lead us through the next installment of our Back to Basics series. It's going to be on capital assets. This is a big area for auditing. I know everybody has questions on this one and talking to clients all year on this area. So this one's scheduled for September 10th. Registration is going to be in the chat. Cami should be putting it in there for you guys right now. Also, it's available on the LSL website. I think it's going to be a really good dive into the kind of basics around this, and I really hope that everybody here can also attend. Okay, let's see what questions we have. Questions look pretty. Where can we learn more about? So I have a question here. Where can we learn more about unclaimed property procedures? Definitely something you can reach out to your current auditor for. You can also reach out to us. Like I said, Kelly and her team, they help a lot of organizations with unclaimed property, whether it's just questions or like procedures and policies to put into place. Definitely would encourage to reach out there. Let's see. What is your recommendation for separation of duties revolving bank reconciliations? I'll mainly turn that over to Louis, since he's going to really talk about good controls and preparing. But for the most part, try to separate. Have a person who is preparing and reviewing be 2 different people, of course. A person who's reviewing those bank reconciliations, they should be able to get like their own copy of the bank statement, so they're not receiving like a potentially altered copy from the preparer. So oftentimes I'll see an organization giving them their own unique login. They'll go directly to the bank's login, pull the statement, and start comparing that to the reconciliation. And then also controls, you don't want the same person reconciling to be also collecting cash and handling, depositing of checks or physical cash. I'll be in that scenario. Louis, anything else jump out at you?
My only recommendation would be for people that work on payroll, AP, or AR, they shouldn't be touching the bank rec. You may not know if they're manipulating information, but also separate from the accountant versus who's reviewing, like a manager or director. Yes, there should be double set of eyes just to make sure everything's posting correctly, or making sure that not just one person is posting and approving. As long as there's that separation, you should be okay. And I believe auditors would be okay with that as well. So there's no processor plus approver being the same person.
Perfect. All right, so Cami, I think we're pretty much out of time. I see we have a few more questions here. I encourage you guys, if you want to send those, reach out to us later. We've been more than happy to take a look, or Ryan might be able to go through them. But I think that's all we have the time for today. So thank you again. Appreciate seeing everyone here. Glad we had so many questions and engagement today. So I hope everybody has a great rest of their week. And yeah.
Awesome. Thank you guys. And just as a reminder, you will receive a recording of this webinar and the slides in your inbox. Just give us a little bit, maybe up to 24 hours just in case. But just keep an eye out for that in your inbox. And registration will also, for the next webinar, will also be in that follow-up email if you guys missed the one in the chat. But thank you again.